Hello, my name is Fred Paine with Private Family Banking Partners. Thank you for taking time to watch this short presentation entitled Finance Your Business and Grow Rich. There's three questions I'd like you to consider as a business owner. First of all, do you borrow money to finance your business? Then no matter how nice your banker is, someone else is making profits off of your business that could be yours. Question number two, do you have a retirement plan that you're putting money into? Are you funding a 401k or some kind of pension program with your business? If so, you're giving money to someone else that your business can't use any longer. And then question number three, do you have capital tied up in your business? Did you capitalize your business with your own money? If so, are you paying yourself interest on that capital that you put into your business? How would you like to make the interest paid back to you from your business tax deductible? I'd like to educate you today about a concept that turns the negatives of these questions into positives. I want to tell you that in order to do that, you need to create a financial instrument that allows us to accumulate a pool of money which is guaranteed to grow. It guarantees that we have access to that money, and it ensures that the profits from the use of that pool comes back to you, the business owner. Now, in order to do this, we use the same financial instrument that many banks use to park their money in a place that's safe and yet guaranteed to grow. The acronym that banks use for this instrument is BOLI, which stands for Bank-Owned Life Insurance. It's held by most banks and it's recommended to them by the FDIC. Please understand that a specially designed permanent life insurance program is a safe, liquid way to hold and use your capital. We use a participating non-recognition mutual company. All of those terms are very important. That shows you that you are the policyholder and own the company. The company participates by paying dividends from their profits to you, and the money that you use is not offset from the dividends that they pay. So to create this private family bank, we build a customized life insurance policy that gives you liquidity. You're able to get to your money whenever you want to. It gives you safety. The money you have is going to be there when you need it, and it's guaranteed to grow. It gives you protection from taxes, and in almost every state it is also protected from judgments and lawsuits. Sounds like a pretty good program, doesn't it? So how does a private family banking system work? Well, first of all, the business owner, that's you, capitalizes a whole life policy that's specially designed to build cash. And then you take out a loan from the insurance company using the cash in your policy as collateral. And then you pay the loan the money, or you loan that money to your business, pay that into your business. It kind of looks like this. Look at this slide. The insurance company has your money. You use your money in your policy as collateral to take out a loan from the insurance company, and then you lend that money to your business at interest. What happens then is the business repays the principal and the interest to you, the policyholder, and your business can write off the interest on its taxes. You receive that interest as unearned income, but you're going to pay that back to the insurance company and deduct the interest that was paid because the loan was used for business purposes. All of that completely allowed by our IRS code. Here's a picture of what the whole thing looks like. You take money in a loan, form of a loan from the insurance company, lend it to your business. The business pays you back with interest. You pay back the loan to the insurance company with interest, and all the while the money in your policy continues to grow. Here's some of the business benefits. You have easy access to financing without any kind of loan application, without any questions asked, without any kind of numbers that you need to have to get loans. Your credit scores are irrelevant. It's your money. You can use it for whatever you want to. And then you pull money from the business as unearned income. The cash value of your life insurance policy in the meantime continues to grow tax-free, just as if no loan was ever taken. It's like using the money twice. You can't get a higher return on your investment than this. And let's look at an example of what that looks like. Let's say you have an investment for over 10 years. If you put in $1 million, it's going to pay you back at a rate of 8.76 or $12,538 a month. Over those 10 years, those 120 months, you'll receive back $1,504,567. Wow, that's not a bad return. But you've got to remember you're in the 20% tax bracket, so taxes are going to eat up about $100,000 of that. The gain after taxes is $653, and so your after-tax total is $1,046,000, which is a 40% gain, and that's not too bad, is it? But let's see what happens if you use a policy to do this same investment. Using a policy, you've accumulated $1 million in your cash value, which we can show you how to design it to grow that quickly and fast. Obviously, it's going to take funding it with more than just a minimum amount, but the money is always there for you to use. Over 120 years at 5% interest, your payments back to the insurance company to repay that loan and interest are $10,607 a month, a total of $1,272,786. You're paying that back from the $12,500 you're getting in monthly payments from your investment. That leaves a difference, and that amount is all tax-free because you're paying back that 5% on a business loan. And so that leaves a gain of $1,932 a month. The $10,600 and the $1,932 come out of that $12,538 that you're gaining. And so you're paying back that $1,932 back into your policy also, but it's not doing paying back your loan or paying any interest. You're buying more paid-up insurance with that, buying more cash value insurance. And you've reduced your taxable gain by over $231,000. And so what does that look like? What does the growth in the policy look like? Well, you started off with $1 million in your cash value. Over 120 months, growing at about 4.5% annually. You're adding $1,545, which is the after-tax amount of that $1,932 that you were getting from your payments back from your investment. And so the gain in value in your policy is $800,000 plus. The future value of that policy after 10 years is $1,008,625. That is an 80% gain instead of a 40% gain. It's 98% better to do it using a policy than just going outright and spending $1 million and funding that investment. It's a great way to become wealthy and accumulate cash. And you might be thinking, well, wow, I don't know if I am making enough in my business to fund $1 million. Well, we've got some ways that we can show you how to do that. But let's take a look at the next slide, which shows you, well, what if I've only accumulated $40,000 in cash value to do this program? Well, let's take a look at $40,000 invested over 15 years, 180 months at the same rate of return, 8.76. You're getting $400 a month, and so the total return is going to be 72,003. But your gain after taxes, because you're in the 25% tax rate, is going to go down to 25,602. But if you do the same thing of paying back that policy loan at 5% interest and putting the difference of that $4,200 back into your policy to buy more paid up addition insurance, your policy is going to grow to $95,000. Started off at 40, it's going to grow to 95,631. That's 139% gain. And using your policy to do this investment is 117% better than if you just made the investment outright. I hope you're starting to understand the power of private family banking and using it in your business. Private family banking is a powerful strategy for financing your businesses. Let me recap. The owner borrows money from his policy and loans it to his business. The business can deduct the interest spent on equipment purchases or anything else that it wants to use the business or use the money for. And at the same time, the owner's policy grows as if that loan was never taken, because we're using a non-recognition company. This all effectively shifts income from the business to your policy, and the growth within your policy is all tax-free. Here's some additional benefits of a private family banking policy. It is life insurance, so if something happens to you, your heirs are taken care of with the death benefit. You can use it for various other things at the same time. It can become a major medical program for you instead of using an HSA. And you're not limited to using it for that like you are with an HSA. We can give you disability protection if something happens to you using a rider. You have guaranteed access to this money, so it can become your emergency fund. This is where I store all of my extra cash. It can be a college savings program for your kids or your grandkids. And you can use it for anything if they decide not to go to college, and so that makes it better than a 529 plan. All the while, you're building cash for retirement. But unlike a 401k or an IRA, there's no restrictions or penalties involved in it. It's great to protect your assets in the case of a lawsuit, and you're looking at tax-protected growth like in a Roth, but again without the penalties. A private family banking policy is also a great estate planning tool. Nelson Nash, who is the originator of this basic concept, says this: everyone should be in two businesses. What you do for a living, your business, and the banking business. That's what we can help you to do. Call me and I can show you how to structure a private family banking policy and see if that would be a benefit to you and to your beneficiaries. Thank you again for watching this presentation.